All right, welcome back. Tajudeen Olayinka, the Chief Executive Officer at Wyoming Capital, is joining me right now virtually from Lagos. Mr. Olayinka, thank you for joining us, and it's always nice seeing you. Welcome to the program today.
Yeah, thank you, Nancy. Good morning.
Good
It's my
morning.
pleasure to.
Yes, let's get started with a review of last week's market. We saw that the Nigerian equities closed in the positive last week. I did say in my markets diary analysis earlier that we've seen the year-to-date return moderate to about 3%. Just in 1 minute, encapsulate for me how the market traded last week and why we saw that positive close amid the negatives that we've seen at least in the last few weeks.
Yes, market closed positive, just slightly positive last week. The same way we have a month to date, positive figure. But if you look at quarter to date, it's still significantly down, and that means that even this month of October, I mean, beginning from this month of October, I mean, we haven't seen much, significant recovery in the market. So if you look at year to date of 3.6%, yes, it's something that present the clearer picture of what the market has gone through in the last few weeks, in fact, the last few months. We've seen a very bearish market, even though it was positive last week. That positive figure is not something. It's not something to celebrate, given that the market has experienced very significant drop in prices and those things that will have made investors to smile. So for me, even though it was positive, I still see a semblance of bearish market last week.
Now, if we take a look at how the markets, from what your analysis has told me right now, we're seeing significantly low prices. How profitable is the market right now, perhaps for a new entrant? Is this a right time to enter? That's question number one. Question number two is for people that are already investors in the market. How can they really balance their portfolio at this time? Since that we're seeing, this is not really a market correction, is it? But since as we're seeing that, especially the year-to-date returns is really shrinking almost week on week.
Yeah. Like I said earlier, market is still significantly down, which offers new opportunity for those investors who might want to come into the market newly. I mean, to take advantage of low prices. As the market bottom out, I wouldn't want to say that, because for those who are speculating, who wish to come in at the time, at the time when market has bottomed out, may not really be keen at taking such a decision. And so anybody who's coming to the market now must be those investors who may wish to invest for a long term. If you are investing for a short term, those short term price movement may still be negative because of the fact that we are in a period of prolonged repricing of securities across market and instruments, including repricing of loans and advances by banks. So during this period, and more so that inflation figure is still not smiling. We cannot assure anyone to say that if you are speculating, this is time to come to the market. No. But if you are willing to invest for a long term, this is time to come to the market. And as market goes further down, then you continue to also come in again and average down your cost. So it's good for those who are doing long-term investment. 3.6% is quite low for a market for a market like NGS. Market is so troubled because of the inflation number and an interest rate. So when the market is in a period of prolonged repricing of instruments, those who want to do long-term investment can take advantage of those low prices. But for those who are speculating, they still have to possibly wait a bit and see how they can benefit from the price movement. Don't forget also that our market is now showing the fact that it is largely internationalized. It's an internationalized market, in which case what happens here and what happens elsewhere can both affect the market, and that was what we saw in the price correction of the Airtel. So if you are investing in the market, don't just look at what is happening here alone. You have to look at what is happening in other climes and how stock market are performing in those climes. before you can then say, your market, prices have bottomed out in your market. So we are in a period of a prolonged repricing of instruments. So long we still have inflation around, so long as CBN is still tinkering with MPR, we will have this kind of situation that we have today. So for those who are coming in newly, yes, the prices are low. If you are looking at long term, if you have a long-term horizon, it's a good buy. But if you want to speculate, you have to be very careful so that you don't burn your fingers.
Okay, perhaps will I take that as my answer, because I wanted to ask you how long you think the repricing of equities will continue. But it seems you said as long as we have inflation that is high, as long as interest rates are also being announced to readjust inflation rates, perhaps that repricing will continue. Should I take it as so?
Yes, exactly. That is what we have seen since the beginning of the interest rate hike to 13% and then 14%, 14.5%, and then 15%. So for long we still have interest rate hike, and of course because the fact that banks are also repricing loans and advances, which is affecting listed companies, especially companies that also depend on short-term finance from banks to operate. So all these things are affecting the market and affecting prices generally. So we will remain on this prolonged repricing of instruments so long we still have inflation around.
Okay, let's talk about the tier one banks, really, because we've been seeing earnings coming in from quoted companies, and I want to start with the banks. Let's take a look at the tier one banks. We have banks like Zenith, Access Bank, GT Bank, which other bank? First Bank, UBA. Those are the tier one banks, really. What is your view about their 9 months? Some are bringing out unaudited financials. What do you have to say about that? And the way that we're seeing that the banks, apparently, majority of them are right-sizing already. Majority of them are losing their staff or have lost their staff due to the Japa syndrome, especially in the tech department. Many of them have left the shores of Nigeria to seek better, greener pastures elsewhere in Canada and in the United States. What do you have to say about how that is impacting the bottom line of these banks?
Well, I think the fact that key or quality staff are leaving banks for greener pasture shouldn't really affect the bank so much, because we still have quality personnel around that they can tap from. We still have quality human capital around that they can tap from. But the significant problem that they have now is that having to reprice existing loans and advances that have been that are already running, loans that are running in their books, and they're having to reprice them. At the time, those customers, those bank customers who have taken loans from them are also being confronted with a very, very harsh environment of business. So it's becoming a challenging time for the banks, and also for those for those companies that borrow from them. So for me, I think fairly well, though they have performed well in terms of cost recovery, but we haven't seen significant cost recovery on the part of banks, especially if you look at their earnings per share. It's just a slight growth a slight movement in earnings per share across board, except maybe FBN Holdings that print a very significant leap in its cost recovery, perhaps because of the fact that it was able also to recover very, very significant, made a significant recovery in loans that had been written off in the past. Loans that had been written off way back in 2015 that came back to the book of the bank, and also that gave the bank a leeway to be able to recover most of its cost, and that is a positive news for investors who are playing in that space. Who are holding aviation stock. So for me, generally for banks, having to reprice loans and advances at a time inflation is going up, at a time their customers are being challenged by myriad of problems, by myriad of macroeconomic imbalances. It's just a terrible time for both customers and banks. But for their staff that have left, I believe they will be able to have a good replacement around. Nigeria is never in short. Is never in short of quality human capital. We have them around. You only have to give them opportunity, and once that opportunity, they will excel. So for banks, they haven't done badly, but they haven't been able to recover costs significantly. More so, we are beginning to see just a moderate rise in their NPL, non-performing loan, especially having to make those provisions at this time. So we are seeing that as a threat to them, but not so threatening as to put them on the loss machine. They are still reporting positive profit after tax and positive earnings. So for that, I think they haven't done badly.
Now, let's say I would have loved to really interrogate the bank's earnings further, but I'm also taking a look at our time. Let's take a look at the reports from the financials from Cadbury, for instance, and Nestle. What do you have to say about that, especially as we've seen that these companies are being impacted by high operating expenses and what have you? Inflation is also biting into the cost of raw materials. Are these companies looking good for investors at this time, especially as we even move towards the festive season, having it in mind that there's a tendency of prices to move higher? So how will these affect the cost of doing business for these businesses that will also reflect in their earnings moving forward, and definitely the share price of these companies and eventual dividends for their shareholders?
Okay, for Cadbury, had a significant cost recovery in the third quarter. I mean, for the 9 months period, it had this very significant cost recovery, and was also able to manage its stretch very well, because we saw that in net finance income. Yes, the company recorded a significant leap in its earnings per share, but it's still subdued considering that. I mean, if you look at where they were coming from, the company is beginning to look up. But even though it grew its earnings per share, it's still not something that we are going to celebrate. But they can still do more. That's positive for Cadbury. They were able to do a very proper treasury management in the area of in finance income. But for Nestle, the finance income was negative, which means that they are beginning to feel the impact of repricing of loans and advances by banks, and of course that also affected their cost recovery capacity. It actually lowered their cost recovery to the point that their earnings per share just moderately. I think it's not so positive. I won't say it was bad, but at least it wasn't completely a bad result. But it's still not something that we know Cadbury for. I mean, we know Nestle for. So I still want to see a Nestle that usually will grow in leap and bound. But for this period that we are having high inflation, banks repricing loans and advances, we have seen impact of that on Nestle. The only cost they were able to save was just tax expense, which actually gave them positive parts for that 9 month period. Generally, they haven't done badly, but they could do much more than what they have done in this last 9 months. The result is still okay, but they were not able to recover costs significantly, just unlike a company that was able to recover costs significantly.
Now, Mr. Olayinka, which categories or which sectors are most affected by high cost of sales and high operating costs, thereby impacting their financials? Which sectors of the market are most impacted? Or would you say that all the quoted companies are impacted in almost the same way?
Yes, a large number of them are impacted, almost in the same way. But a few number of them still, manage to escape, the cost armor. They were able to recover significantly. If you look at the banking sector, all the Taiwan banks just managed to, recover costs. But you will not say the same thing of Fidelity Bank. which was able to recover cost significantly. How they managed to do that, I think it must be because they have access to some kind of very cheap funds that they're able to deploy and get good return on their assets, especially on their risk assets. So Fidelity did well in that area, in the area of a significant cost recovery in the banking sector. The same way, FBN Holdings also recovered significantly in the area of a cost recovery. But Zenith, GT, and several other banks really didn't do much in that area, perhaps because these are large-size banks, and because they are involved in virtually every sector of the economy, where they have to reprice existing loans and advances. And don't forget, when banks are repricing loans and advances, it also discourages new businesses that may want to approach them for loans to also come in. And so that is also affecting what they have what they have in their book as loans and advances, even other risk assets that are part of it. So it's increasing the impairment charge, and that is something that banks have to manage going forward. I mean, for the rest of the year, they say have to manage that. For consumer goods sector like Nestle and Capital that I mentioned earlier, they are still trying to manage. Generally, cost recovery is not significant across board, but some of them were able to recover cost significantly. Like I mentioned, Fidelity in the bank industry, Capri in the risk sector. Also, I think one country like that also did a bit of a recovery on his the recovery of his cost. We are actually in a difficult time, but all of them have, just to be in fairness, all of them, they have done well compared to what the economy is saying. If the economy is saying what it's saying today, and those companies are able to recover as much as 25% of cost, that is significant. That is significant. If they have 25%, if they have 25% profit after tax, margin, that is something that is good for many of them. Some had less than that. Some had as low as maybe 15 or 9%. But those of them that have the net profit margin of about 25-26%, I still commend them for that pitch.
Okay, Mr. Olayinka, in just 1.5 minutes for you, let's take a look at Dangote Sugar. I don't know if you saw the report from Dangote Sugar that it posted about 102 billion naira for the third quarter of 2022, and that increased from about 63 billion in the same period in 2021. Dangote Sugar hopes to produce, I think, about 1.5 million tons of locally produced sugar cane, that's sugar from locally produced sugar cane, across many states in Nigeria. What is Dangote Sugar at this point telling analysts like you and investors? That's one. The second part of the question is that let's take a look at agro processing companies like Okomo Oil, Presco PLC, as well as, what was the third one now? Livestock Feeds. Yes. What do you have to say about these companies, especially as we've seen profit drops among those agro processing companies? Very quickly.
Okay, for Dangote Sugar, I think market is still, that performance was good, but market hasn't been able to take it to a level where ordinarily in the past, we'll have taken it to. But don't forget also that market is also looking at sustainability of this current performance of Dangote Sugar, because we saw that in the past they also had that kind of good showing, on their audited result, and then when they came to full year result, we saw something a little different from that. And so when we are analyzing or taking decision on whether to buy, whether to reprice them up in view of this performance, not many investors may wish to do that because of the fact that you can't predict what will happen next year. You can't predict what will happen the next 2 years because we still have a very challenging economy. And so if the fact that they have done well in the last 9 months, it's kudos to them, but that does not mean that we should price them out of context. That's for Dangote. But for the agri sector, they are still recording those positive sentiments, in the sense that no matter how you see the economy, the agri sector is still making very significant contribution, and they are also benefiting from those significant contributions to the economy in the area of their earnings. So I think for those Okomo and Pesco and any other company in that sector that is actually showing interest in that sector, they have done well for the last 9 months. I still give it to them. So for investors, it's still cautious pricing, because we are not going to take the earnings alone. We are also going to look at what is happening in other clients, how investors are pricing these instruments in other clients. How are they pricing similar instruments, similar securities or similar companies? What is happening to them? So at this time, like I mentioned earlier, our market is now largely internationalized. The hit you are seeing in the FX market, especially in the BDC or black market, is coming from some of these investors who are selling up to be able to immunize their investment in foreign currency. So a lot of things is going on, not necessarily because they hate the market, but because they are not too sure whether some of these companies will sustain their current earnings. So that is the state we have.
Olayinka, for kicking off this week with us. Let's hope that the market ends in the positive territory as it did last week, but on a stronger basis. And perhaps for those watching, like you said, you've got to have long-term lenses while you're looking at the Nigerian stock market. Thank you very much for joining us today. I wish you a great week. All right. I've been speaking with Tajudeen Olayinka, who is the Chief Executive Officer at Wyoming Capital. That's a wrap on the show today. I hope you enjoyed our package. In case you did not, or if you did not, or you didn't understand all the English I was speaking, just, calm down. Try to understand what I'm saying, because it affects you eventually. But just keep a date with us again tomorrow. Same time on this channel, 11 a.m. to 12 p.m. This is the best place to be at that time with everything concerning business and economy. I'll see you all again tomorrow. I am Nancy Naji. Be the best you can be and be that change that you want to see. Bye now.